Hello, we are going to look at higher time frame structure with lower time frame continuation. This is all based on price action. And as an example over here, let's look at a skeletal structure first, okay? The skeletal framework of what we are going to study today concerning higher time frame structure and lower time frame continuation. Now, from the left over here, you can see this structure. This is a selling market. Market is making a low, went up, make a high. So market made a low, went up, make a high, went down again. This high confirmed, low confirmed, and all this over here on this yellow line is on the higher time frame of the weekly. Okay, that's on the weekly time frame. Then what do we have to do when price is coming back? We cannot take our Fibonacci retracement, target the previous high points and this new low that has been formed. Then as usual, we'll mark out our 0.6 Fibonacci level on the weekly and the 0.7 Fibonacci level on the weekly also, meaning that now that you have already marked it, we have already marked the 0.6 and 0.7 Fibonacci level, we can now remove the Fibonacci 2. Now in this scenario, the market is already at 0.7 Fibonacci level of the weekly. Now we are observing all this on the weekly. What do we have to do next when price now come back and get to our 0.7 Fibonacci level for our entry? We now have to go down to the corresponding lower time frame, which is now from the weekly. We go to the daily. Then on the daily, what are we looking for? We're looking for our entry signal. Okay, and one key point of our entry signal is this particular candlestick formation over here. You can see it. This is our evening star candlestick pattern, whereby if we see the structure forming on the daily time frame at this point of the 0.7 Fibonacci level, we cannot take it with good faith that this market will continue to sell downward on the lower time frame, which is on the daily. Now, after we have seen this particular structure, this particular candlestick pattern on the daily, we can enter this trade and continue to sell. Our major target is going to be the previous week low point. Okay, now what this we have observed on the higher time frame that the market is selling, and this is correct on the weekly. Now we can now observe on the daily time frame, which is on the lower time frame now, a continuation for the price to be selling. Okay, when price get back to the 0.7 Fibonacci level, price has given us our signal to sell. Okay, when price has given us a signal to sell on this daily time frame now, when price get to the 0.7 Fibonacci level, what can we do next? Okay, we are still on the lower time frame continuation now, meaning that weekly is selling. We see our entry on the lower time frame, on the daily time frame, and we're also selling. Now there can be another structure that will happen still on the daily time frame. As you can see over here, after the signal has been given here, we have entered the trade. Then the price is coming down. When I mean price, I mean the candlestick formations, the different candlesticks that are forming and they are coming down. You can see another pullback there. Price came back down. Okay, at this scenario, there's a previous high point on the daily now, which is the lower time frame of the weekly. On the daily, price is giving us a low, a high. Okay, now if this structure now happen that another low has been formed here, price is coming back, making a pullback. Still on the daily, we cannot do what? We cannot draw a Fibonacci retracement on the new high point that has been formed, take it to the new low point. Then we can mark out our 0.7, our 0.7 and our 0.6 and the 0.7 Fibonacci level on the daily. Okay, and what do you think we'll be doing there? We are going to be selling. Okay, let's remove the Fibonacci 2 now. We have already marked out our 0.6. We can also mark out 0.7, but in this example, I'm using 0.6. Now, when price get to the 0.6 daily Fibonacci level, what can we do? We have now to go to the lower time frame of the daily, and the lower time frame of the daily that we usually recommend to use is the 4 hour. Okay, And what are we expecting to see when price get to the 0.6 Fibonacci level on the 4-hour? We also want to see this type of candlestick formation, okay, as our entry signal. I hope that is clear and we understand it. Now let's go to an example on the real chart. Now you can see I took my time to make all the explanations of why we want to take, of why I'm taking this trade already, because I already took this trade. As an example, this is volatility over crash 400, all those derived, trading stuff. Now in this scenario, we can spot our previous low here on the weekly, a previous high on the weekly, also a new low that has been formed. What do we do next is to draw our Fibonacci 2. Okay, when we draw our Fibonacci 2 from the high point there, we draw it to this low. When we draw it to the low, we mark out the 0.6 and the 0.7 Fibonacci level. Okay, this is 0.6 and then the 0.7 Fibonacci level. Okay, now we can now remove the Fibonacci 2. When we remove it, in this scenario already, you'll see the market is already at the 0.7. So let's remove the 0.6 Fibonacci 2. We are on the weekly now. What do we do to get our entry there? Now that price is at that 0.7 Fibonacci level, we now have to go to the corresponding time frame, lower time frame, which is the daily. Now on the daily, what are we looking for? We're looking for our entry candlestick formation. You see, on the daily, price give us this. On the daily, price gave us this candlestick formation, our evening star candlestick pattern, meaning that we can say, and this met all our criteria. We just have to do what? Place our set trade there, and you can see this is a beautiful trade that is going in a very good, that is giving us a very good profit already. Now that is on the daily. Right now we can see a new high has been formed on the daily, a new low has been formed also on the daily. We can see what price is doing now. A new low has already been formed again on the daily, and a new high has been formed. A new low is now forming. What can we do here over now is to do what? Take our Fibonacci 2 again, mark the new high point on the daily. Okay, take it to the new low, and then what can we do over here? We now take the 0.6 level. Okay, 0.6 level, and then the 0.7 level. I'm sorry, this Fibonacci 2 is not, I've not put the essential values there. 0.7 level is around this range. Okay, it's around this point, 0.7 and 0.6 on the daily. What can we do now is to expect price to get to the 0.6 on the daily. We'll go to the 4-hour, or price to get to the 0.7 on the daily, then we'll go to the 4-hour. Okay, let's go to the 4-hour now. You can see price is still coming. So when price get to 0.6, if we see our entry candlestick formation, that formation, if we see it, we can enter this trade to sell from the weekly now, from the daily, from the 4-hour, and then we can take our signal there, our entry there for our profit. Sorry, we can now make an entry if we see our signal 0.6 or 0.7, put our take profit over here, or we can sell all the way down to the main target, which is the previous week low point. And all this we are doing it in correspondence with the higher time frame, because the higher time frame structure is telling us that yes, this is selling market, and our Fibonacci level has already confirmed it on the weekly. We have seen our entry on the daily. Okay, when we see our entry on the daily, we're already in this trade. You can see the trade is already giving us a good profit. Then we can also, if we can see another entry on the daily, we see a structure on the daily now. Then if price get to this our Fibonacci levels on the daily, then we can look for our entry also on the 4-hour. And if price give us our entry, we'll do what? We take it. That is just all about this class concerning the major structure, higher time frame structure, and then the lower time frame continuation. All you have to do is to spend more time on the chart, and all this will be very easy and clear to you. Now there's something that I did on my mentorship channel. that I want to talk about over here. Okay, you can see that over here, before price make a reversal to get to this 0.6 or 0.7 Fibonacci level of the daily, there's a way you can counter trend, which you can counter trend it. You will see an entry there that you can use to buy this market. Even when the major market is selling, you can buy this market and continue to this 0.6 or 0.7 point. How to counter trend trade, all those things I explained in my mentorship class. It's not necessary or compulsory for you to enter it, but if you want to learn more, you can email me and let's talk about it. So that is the lesson for today. Learn, practice, and be profitable. Thank you.